Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 21st of July. Starting off with Ciprotex, where you can see that there's a breakout here through the former December resistance from last year, £1.30. Above that, we're looking for a target here suggested by this April 2015 resistance line projection, currently heading towards the 200 pence level. The overall breakout backed by this extended RSI uptrend line here from as long ago as May last year. And we're also helped by the way that there was an unfilled gap to the upside in May of this year through the 100 pence level. And the shares have been unable to fill that gap even after a counter move gap in June, along with the Brexit vote. The view at this stage really is that it's unlikely it will see any price action back below former June resistance at 120 or the 10-day moving average just around 119.9 pence. The ideal scenario is that even 130 comes in as new support. Any dips towards that 130 zone currently regarded as a buying opportunity just to cool off the RSI, which is overbought at 86 out of 100. Gable Holdings is next, and here we can see that potential turnaround here, early stage turnaround, which can be quite satisfying for people who get involved at this stage. What's the best thing to look at at the moment is probably this old May low at 3.5 pence. While we're above that on an end of day close basis, we have a bear trap rebound from June and from the beginning of July. We also had a higher low above the June floor, which was 2.72 pence, a higher low for July at 2.75. So that should help the shares and implies a target here as high as 6.27 pence, which is the present level of the 50-day moving average. Herenthia Resources is next, and here one of those highly traded mining stocks. What we have is a possible turnaround here with a higher lows above 0.02 pence to start July. It looks as though we could head up towards the top of this rising trend channel from the end of February. That's currently pointing at a target as high as 0.09 pence, and that could be hit as soon as the next 2 to 3 months. RSI just pushed above neutral 50 as well, to stand at 56, which is a leading indicator on upside, as is the gap fill rebound from May, which was filled down to 0.02 pence to start this month. Early cautious traders really waiting on a break of the 200-day moving average at 0.04 pence before pressing the buy button. Next up, Powerhouse Energy, and a situation worth looking at in the sense that we've got double break above the 200-day moving average at 0.8 pence for July, V-shaped bull flag. That should take the shares up to a notional target as high as 1.4 pence at the top of a rising November trend channel. Time frame on that move as soon as the next 1 to 2 months, perhaps even sooner. If you're cautious on the stock, maybe you'd wait for a weekly close above that at 0.86, rather 0.99 initial July resistance. Onto a stock which has been bubbling under for quite some time, but finally got some traction with an overall recovery in the mining sector, SULA, iron and gold. Looks like there's a final dip for the shares towards the 0.12 pence level. Possible falling wedge formation here, which can be drawn in this way, and break outside the 50-day moving average at 0.17 pence should be enough to take the shares up to the main resistance at 0.25 pence. So definitely one to keep on the watch list, given the extended attempt here by the shares to find a lasting floor. TP Group is next, and it's been one of the more solid recovery situations of the recent past. Broke above the 200-day moving average in April, found that as support down to 3.26 to start July. Got these little turnaround bull flag situations here, especially over the last week, and that should take the shares up to 8 pence, which is the top of a rising trend channel from last summer over the next 4 to 6 weeks. Stop loss at this stage probably back below the initial July resistance at 5 pence, or alternatively the 10-day moving average as a trading stop, 4.72 pence. Finishing off with another stock which looks as though it's gathering significant momentum. VLX, great turnaround that we've seen over the last week or so, closing above the 200-day moving average at 43.78 pence, and really while we're above 40 pence, looking for a target here as high as the top of this rising February trend channel at 62 pence over the next 1 to 2 months. That's it for me. More updates at the same time tomorrow.